Hi, welcome everyone to the Tech for Good breakout room. We just let our panel join and then we'll be kicking off as quickly as possible. Just got one more to go. Great, so hopefully you're all in the correct place. You've navigated the tech. This is the tech for good with the bad, investing for tech for the good. So we're going to take a look at tech for good from the investment and the entrepreneur side. Talk a bit about why people should invest in tech for good, what to look out for, what are some of the emerging trends, and some advice for entrepreneurs pitching in this area. So we've got a great panel. I'm going to give them a 1-second overview, and then they're going to introduce themselves because they can do that better than I can. So we've got Chet Warner from Ada Ventures, Chris Parsons from Clearly So, and Sutin from the Social Tech Trust. I'm Penny, I'm from NorthInvest, and we've got a real focus for tech for good this year, so we'll be happy to chat to anyone afterwards about how we can help you. So I'm going to ask each panellist just to introduce themselves, talk a little bit about what their organisation does, and tell us how they define tech for good. We don't want to spend half an hour discussing definitions, so I thought we'll just get that out of the way and then we can dive into a few topics in a bit more detail. So let's go with Chet first.
Everyone, I'm Chet Warner. I'm one of the partners at a fund called Ada Ventures. We invest in overlooked founders and overlooked markets. We've got a slightly different take on tech for good than some of the other people on this panel. We really think about diversity and inclusion very strongly, and we've designed our whole fund to make sure that it is truly inclusive of anyone. We will invest in anyone. We do that through working with a scouting network of 70 people who run communities that are overlooked within venture and tech. And we also invest in companies that are solving some of society's biggest problems. So we have sort of two takes on tech for good, and I'm sure we'll talk about that in a little bit more detail later on.
Brilliant, thanks. Sutin, do you want to go next?
Sure, morning everybody. I'm Sutin Yang, Portfolio Manager at Social Tech Trust. And Social Tech Trust has traditionally been kind of a grant funder in the tech for good space. But in the last couple of years, we've taken a more active role, not just grant funding, but also running programs, kind of crystallizing all the learnings our alumni have had, and we've had working with them to run programs, some accelerator innovation programs, such as Microsoft AI for Good, Civic Innovation Challenge, and so forth. And then we are also looking at raising a social tech venture fund to help fund the early stage tech for good space, where there's often we find after grant funding, there's a lack of funding there. For us, tech for good is basically you identify pressing social challenges and apply technology to deliver the solutions. But there are kind of a few key components, such as getting genuine user engagement for your end beneficiaries and collaborating in the space to make sure that you are really working and bringing along everybody, not creating a bigger digital divide with the technology.
Fab. Chris, over to you.
Great, thank you, Penny, and thank you for inviting me to the panel. So I'm Chris Parsons. I head the enterprise team at Clearly. So unlike Chet and Susan, we're not a fund ourselves. We are a corporate finance firm at Clearly. So we help and specialize in helping high impact companies that are solving a key social or environmental issue, but also we think commercially scalable, we help them raise capital. So we kind of connect the entrepreneurs with the investors like Chet and like Sutin. We've been doing it for about 10 years. We're now more focused probably on Series A, Series B, but we still work with early stage companies from time to time. I think to us, impact investing or tech for good is all about working with companies that again have identified a key social or environmental issue. It could be reducing pollution, improving education, tackling mental health. Those sort of issues is a key problem they are addressing, and they found a commercial, scalable way of creating a business that tackles those and solves those. So we see impact investing very much as helping companies that are solving key problems, but also commercially strong and appealing to investors, and we help them raise their capital to grow their business, be successful, and of course improve their impact.
Brilliant, thanks everyone. That's a great start. Interesting to have a panel that's dealing with slightly different bits in the sector, but quite a lot of commonality of purpose there. So let's start with a sort of investor hat. Why do you think investors should consider investing in tech for good, the kind of companies that you guys invest in? Who wants to kick off first? Check.
Look, I think in our case, I think the UK tech market last year invested 15 billion. That's it's a huge sector now. I think it's bigger than the construction industry. It's one of the biggest industries that we've got now in the UK, and huge number of jobs. And I think we are facing some huge challenges in the last year. We've seen that with COVID, but obviously the climate crisis, some of the sort of social issues that we face in the world. And actually all of that money could be going to solving some of those, or at least trying to address some of those problems. And I think when Matt and I decided to start Ada Ventures and raise this fund, we did think, what do we want to do for the next 30 years, 40 years of our lives? It's a long journey starting a venture fund, and we both had complete alignment on that, of we want to invest in things that are trying to make our world and our society a fairer, better place. And I think when you look at the scale of some of the issues, particularly around diversity and inclusion, something like 3% of capital goes to all female teams, and very, very few dollars go to teams that are non-white. We need to do something about this, and we saw an opportunity with Ada to address that. So there's so many reasons for us why this makes complete sense. And almost reflecting on it, we think, why would you start a fund where you weren't trying to address these big issues, particularly because that's where all the capital, all of the government kind of interest, all of the press is going as well.
Chris, do you want to?
Just to add to what Czech was saying, I entirely agree. We all can see that COVID has brought to light some real social problems in the UK that were there already, but perhaps were less visible. And the environmental issues have not gone away either. So the need to solve these problems and tap the capital markets is stronger than ever. And also touching what Czech said, I think from the other side of the picture, the investors who come into funds like Czech's fund, they are looking more and more to not just avoid negative potential companies or avoid investing in companies that cause damage. They're looking for positive, and they're looking for companies that actually are solving a problem as well. So those two themes are very true. I think I'd also add, though, from our point of view, and helping companies we think which are solving a key problem, they're stronger. If they build a business around tackling a key social issue, it is reducing pollution, helping children who can't access education improve their learning, whatever it is. If they build a business around that, and that's such a strong need, in our view, they are stronger and more appealing and more likely to be successful. And I think that's a very important reason investors now are cottoning onto, and why I think tech for good or impact investing, whatever you want to call it, is so essential now.
For us, it's we've watched this sector for over a decade, and it's really gained a lot of momentum. You can see the growth of consumer demand is changing. You have the UN Sustainable Development Goals, which is a 12 trillion global opportunity until 2030. So there's plenty of money to be made there. But there's also a desire for purpose-driven jobs, and for not just investing in profit, but actually profit with a purpose. So if a lot of this money that just goes to profit, we could also focus it on solving problems, we'd probably be a lot further on, a lot better off than where we are now. So it's killing two birds with one stone.
Brilliant. So I'm an investor. You've convinced me. My checkbook's open. Tell me, what should I look out for? How should I choose where I invest, and what's different from other sort of maybe more traditional investment sectors?
I think a key one for us is mission lock, is making sure that the company that you're building and the social impact that you want to have are completely synergistic with each other. They're not pulling in two different directions. So your business model has to ensure that the more that you sell or the more that you grow, the more positive impact that you have on the end users you're trying to address. And I think that's not always the case. Often you sort of get this slight misalignment, and actually over time, as you start growing, that creates a real tension within the business, and it starts to feel like, actually, let's just cut out the social impact stuff because we're not gonna, it's slowing us down. So that's, a key thing that we look for. We also look for authenticity in the mission. Who are these people? Why are they genuinely doing this? And for that, we really dig into people's backstories and why they've decided to go down this route. In particular, one of our portfolio companies is a company called Organize, which is it's a workers' rights platform. It's a kind of digital trade union, reshaping how low paid workers basically come together and campaign for better rights at work. And one of the reasons why the team was building a technology company to address this problem as opposed to a non-profit was that they wanted to get to the kind of scale to reach millions and millions of workers. So that was such a key part of their mission. And so for them, it did make a lot of sense to go down the venture funding route. I think too often founders think that venture capital is the kind of solution to all their problems, and we must raise venture capital because we'll get to be in TechCrunch and we'll get to be, in the glamorous, newspaper articles. But actually, it's not right for every business, particularly for companies that are who are trying to solve a specific tech issue, a specific societal issue. I know in my case, I co-founded a non-profit called Diversity VC, and that was the right organization for the problem that we were trying to solve there. And so I think it's important as investors to be really honest with ourselves about, is this company right for the kind of capital that we've got, and why are they actually seeking out that capital? Is it authentically linked to the societal mission that they're trying to solve?
Can I just build on that, Penny? So I think we've got a slightly wider perspective, I'd say. So again, our role is to connect the companies with the investor and find the right investor for the company. I definitely agree that fit and alignment between the kind of entrepreneur raising the money and the investor coming in is absolutely essential. But sometimes it may not be a particular special impact fund that the company wants or invests in them. It might be a more mainstream investor, but again, that sense of alignment and fit with the investor, everyone's on the same journey, wants to achieve the same things, the same time scale, is absolutely essential. So I think my advice to entrepreneurs is, when speaking to investors, if it's a very strong impact theme to what you do, and you really want to find that impact investor, then absolutely what Czech said is right. That they will look very hard at what problem the company is solving, that the founders know mission, objectives, and background. Whereas more mainstream investors will look less at that, but may still fit. So it's not just the impact side; it's also the commercial element. So clearly, any investor, and I presume Ada will be part of that. We'll also look at the strength of the team, the scalability of the business, how different really is its technology, its USPs, its moat compared to others. There always will be the commercial questions that any investor will ask and probe at, as well as actually, really being comfortable with the kind of mission and focus of the company also.
And I think advice to entrepreneurs: can you use your impact as a reason for why your business is stronger anyway? So recently we invested in a company called Ticker, and they have a really high referral rate. They've actually got low cost per acquisition. They've got quite a lot of organic traffic, because what they do is they help people to find impact investments. So they allow people to invest their money into impact areas, and because it's something that people want to tell their friends about and they want to talk about, because it's fascinating and they feel good about it, actually there are lots of sort of positive business externalities that are driven by that social mission. And so I think entrepreneurs who are building tech for good should think about the sort of numbers that investors will be looking at, like cost per acquisition, lifetime value, all of those metrics, and think, does our social mission actually help us to drive down those metrics or up those metrics in a positive way?
So we completely agree with what kind of Czech has talked about, with the impact being completely aligned with purpose. That's definitely something we look for. And with Chris, what he said about having the business, a sustainable business model. And I think the only thing I would add on there is making sure that they have kind of genuinely worked with the beneficiaries and worked through the solution that it's actually making a positive impact, and kind of taken measurements to make sure, they've mitigated any potential negative impacts as well. So kind of efficacy of the solution, and preferably some element of co-design, right? So that if you're working with elderly or working with people with dementia who might not want to use tech, that you've developed it with their preferences and working along with them so that it does fit their lifestyle and what they want or don't want to use it for.
Great, thank you. I'd add that I know Czech and her co-founder Matt publish regular articles on Medium talking about why they invested in particular companies. So I think that's really interesting, particularly from entrepreneurs, to understand the mind of a VC and what chimed for them. Chris, did you want to add something?
I think just to add also to what people are saying, I think both on the impact side, but also kind of the commercial side, is just kind of evidence. track record. So from the commercial side, showing you actually have got, you've achieved some things already. You've got some external validation. You've got customers. You've got definite demand for what you're trying to create or service or produce. But also from the kind of the impact side, you've got validation. You can prove or show with some data actually the actual benefits you are achieving in the world through your business. I think that, to give you an example, we had a company a year or so ago called BioBean raised some money, and they kind of take coffee waste, and believe me, I produce plenty of coffee waste, and they recycle it and actually prevent it going to landfill. So all the emissions are prevented, the kind of greenhouse gas emissions, and actually convert it into a fuel and basically supplant wood instead. So they got a very tangible track record. They got customers signed up, but also they got external validation in terms of all the emissions they are preventing being created by diverting that waste from landfill. So I think track record and validation, both commercially, but also showing that you are achieving your purpose, I think is essential.
Brilliant. Okay, just a reminder to everyone, there's a Q&A tab on the right-hand side somewhere of your screen, so we'll hope to get to some Q&A towards the end of this session, so pop any burning questions in there. So I'm going to take a slightly different tack now, and I'm really interested to know what trends, technologies are emerging that are interesting and exciting, and maybe on the converse, ones that you've seen lots of that maybe are becoming a bit common. So what are the interesting new emerging areas, and what are the ones you've seen lots of? Sutin, do you want to kick us off on that?
Wow, there's always interesting, tons and tons of interesting solutions in all the areas we're looking at. I think with basically COVID, what we've seen a lot of, or actually what maybe we've been focused on, because it's always where you're looking, right, is probably remote healthcare. It's been something that people have been looking at, but it's really accelerated with COVID and with the need to be able to provide services remotely for care homes and the most vulnerable. So we've seen a lot of that acceleration happening. I think we've also seen acceleration of the use of AI to facilitate it. So while the end goal, I think, is to be able to use AI to diagnose, that's not there yet. We're not anywhere near there yet. But what you can do is use AI to kind of streamline and highlight things. So we've seen a lot of that use, plugging that into diagnostic tools as well. So that's quite exciting, because maybe eventually we don't all have to go to the GP. Maybe we can eventually use a stethoscope or something and plug in and have a quick chat with the GP. That's something that we've seen a lot of.
I think just from our side, I lead our work in the education and training sector in particular. And one theme I've noticed become more and more prevalent is reskilling, or skilling of make sure that people got the right skills for where the world's now heading. And clearly tech is very much underpinning our world and our life going forward. And that's very much right from children, from childhood, helping children improve their tech skills early on, but also be able to be emotionally strong and resilient and actually coping in the world that's been driven increasingly by tech. And that goes right through from children right through to people in their 20s, 30s, 40s who are forging new careers in a more tech-driven world, or having to reskill and learn new careers as the market develops and evolves. So I think we are seeing a whole variety of companies with some amazing solutions in some way helping people of all ages reskill. And I just think that's a theme that's going to be here for a while. And I'd be interested to hear what kind of Sutin and Czech say, but certainly I think we do see quite a few investors, especially ones who like more B2B businesses, so those sort of models, seeing that as a growth area.
Yeah, no, I think that is a really big growth area and so important. I think one of the things that's happened over the last year is that tech has been an incredible sort of savior, really, of our society. Like, we've been able to keep going because of technology. And I think that has been, as we've seen, very unevenly distributed, because there are a lot of people who don't have good internet access, that don't have laptops, that don't have, private quiet spaces to do their work on, kids at school. So, one of the things I'm really interested in is how can we get technology to be more accessible to the broader population, and particularly people who have disabilities. And I think that that's a really exciting area of technology that we really don't have enough solutions in. And so we have one of the things I talked about earlier was that we've got the scouting network, which has 70 people who run communities that are underrepresented within technology. And some of those scouts are people who run communities of people with disabilities. And they are sort of, eyes and ears, I guess, on the ground, looking at some of those technologies and bringing us some of those ideas. So I think that's a really exciting sector. I think, mental health has been absolutely decimated over the last year, and we urgently need more solutions there. We recently, last year, looked at a company that's doing gaming for young people and children to help them with anxiety and depression, which was a really awesome idea. I think, online accessibility, like people who have, visual impairments or hearing impairments, we don't really think about it often because we have that bias because, I say myself, like being kind of able-bodied and not struggling with any of those things, it's easy to miss it. But we've got to do better on that. And then I think healthcare is still an incredibly exciting sector more generally. So this sort of rise of synthetic biology and all of these new approaches to drug discovery, we've seen it with the vaccine over the last year. It's absolutely incredible that we've been able to develop multiple vaccines for something completely new. And I am really, excited to see how that will play out and, solve some of these things that we've been struggling with for years and years that we've just thought, we're not going to have a cure for them. But I've seen in my own life, I've got family members who have had serious illnesses that have actually been amazingly positively impacted by the development of new drugs. And so I'm very, very optimistic about that.
Anyone, any thoughts on the sort of area of sustainability, sort of clean tech, recycling, net carbon impact? Susan?
I definitely think that a lot of progress has been made in that area. One of our alumni, Recycle, they basically are bringing robotic AI vision with robotic arms to be able to pick out recycling from garbage in the normal waste. So, and they're 60 times more accurate and hopefully faster. So I think we are going to see quite a lot of work in that area, and especially with the amount of funding that's going in there. I think it's been one of the Innovate UK and Horizon 2020 focus areas as well. So we're making a lot of progress there.
And we see a lot of activity there as well. So the whole sustainability, circular economy, kind of climate tech is now called, is very much a kind of focus for us. I think a lot of work has been done in the electricity space in the UK, certainly. There's a very strong renewables electricity sector in the UK. I think being a supplier sometimes can be challenging, as you may have seen in the press with some suppliers. Where there's a lot of work still to be done, though, is around heating and transport in homes. That's a large problem to address. But again, we're seeing a very exciting variety of innovators, entrepreneurs coming along with solutions about tackling kind of energy inefficiency of homes. But also to touch on what Susan said, we are a very wasteful society still. So looking at going back to source and actually producing more products that aren't plastic related, as well as actually finding ways to deal with that waste. There's some very innovative companies coming along, and that's definitely a growth area.
I think one of the challenges with investing in environmental tech is they are really quite different businesses in many cases than the typical kind of enterprise software tools. And you do have to be quite specialist in some of the sort of technology solutions in order to invest in them. And I think there's some really exciting new funds popping up across Europe, including a fund called Pale Blue Dot, which we're very close to, and actually we're doing an event on Wednesday looking at kind of opportunities in climate investing. I think for a pre-seed and seed fund like us, we can't be funding the next generation of battery technologies, doing something incredibly cutting edge that's not going to get to market until 2026, because it's just not going to fit the time horizons of our fund. But actually, Daniel Ek, the founder of Spotify, has recently launched a fund that's really looking at breakthrough technologies on a sort of 10, 20, 30-year time horizon, and trying to fund, whatever the next generation of kind of carbon capture or hydrogen or battery technologies are. And so I think it's a great time in Europe for all of this to be happening. I think we've got a chance in Europe to really be winning in this sector. But we will need the kinds of patient capital vehicles like the one that Daniel Ek is founding in order to fund some of these kind of more difficult technologies.
It is a very special sector, I agree, Czech, and actually it can be quite a capital intensive sector also, which doesn't always work for some investors. But where we see a lot of kind of software tech being applied is actually changing behavior. So whether it's consumers or businesses finding a way, making us aware of actually how inefficient we are in terms of how we use energy, or kind of how we live our lives. So whether it's kind of a B2B or B2C model, we are seeing companies coming along with software that makes us more aware of how we live, and finding ways to manage our behavior, and actually source our energy or from more renewable sources more directly.
So this is a really interesting area actually for social tech, because if one thing that social tech companies can do very well is actually collaborate with other companies in the sector and accelerate that development cycle. So instead of everybody trying to invent the wheel in a different way, if you're able to collaborate with others, you can accelerate that much faster. Recycle has worked with an existing robotics arm firm, basically. So they went from prototype to actually deploying in a lot of UK waste facilities within less than a year by working with an existing robotics arm company, combining their kind of AI vision tech. So this is an area where I strongly encourage social tech entrepreneurs to reach out and look for partnerships, look for collaborations, because not everybody needs to be solving the problem on their own in silos, as a commercial firm would tend to do.
Brilliant. Well, there's a vast array of issues and topics for people to go at there. Let's just, I think you've covered it a little bit, but let's just turn it on its head. Some tips for entrepreneurs if they're pitching in the tech for good area. What should they be thinking about? So they're going to be pitching to guys like you. What are you? What are your tips for them?
I think, really all the things that Chris talked about, you've got to nail your product. You've got to nail that you're solving a real problem. You've got to nail that your business actually works better because of your social mission. And you've got to think about kind of what your story is and how you're going to tell your story to really convince that investor that you've got that, mission that goes beyond just, I want to make money. You should want to make money as well, but there's got to be a reason why you're doing something for, in the socials, in the social space. But then also think about kind of what are your key metrics and how can your social mission actually address those? And one of the things that I think is often missing is that social tech entrepreneurs, they start with something, a very specific problem, but they don't often have that kind of zoomed out view of how do I then extend that problem out across the world? How do I ultimately kind of go on to reach, millions of people, billions of people? And that's what, us as a tech VC want to see. We recently invested in a company that is tackling obesity with a new therapeutic, and that is an enormous global problem. And that founder was really able to articulate how do they go from a small number of people who are going to be sort of trialing this therapeutic initially to scaling it up and going global with it. And that's what all VCs will want to see.
And I think just expounding on that a bit, the piece that we really want to see is kind of what efficacy have you had? So what types of impact has this made on the users? Even if it's just 10 people, 20 people, 25 people, right? You need to do some surveying or some impact measuring with them, be it very simple, but to find out what's the change it's made in their lives and how is this better than what they already have? Is it actually worth investing in this type of technology?
I think all those points are very valid. I mean, scalability, differentiation, advocacy, track record, all those things are things that a company will need to show to an investor. What I would say, to any entrepreneur wanting to approach an investor, I'm sure Czech and Sutan will support this. Unfortunately, investors receive lots of applications and lots of companies seeking to raise money. So the message I would say is to an entrepreneur is, try when you're putting together your pitch, your proposal. In your first minute or so, on your first page, just try and have something that really makes your opportunity stand out. Whether you've got a deck that's very graphic or it's just something that really catches the eye of the investor in terms of the problem you're solving, how you're doing it, the track record you have, whatever it is. I think because they look at so many deals and so many opportunities, just be able to kind of show straight away something that catches their eye, and you think, oh, that's the trick. I think that's the message I would say to potential entrepreneurs.
Mm. And I think
also, one more thing is, sorry, check is.
Okay.
Take a look at other ways of funding as well. So there could be grants that you could apply for from grants and foundations. There could be, Innovate UK funding, other ways of funding. And also, really, you need to focus on always revenues. So how are you getting to revenues? If you can't raise the investor money, what are you going to do? If you focus, because at the end of the day, your goal, right, is to become a sustainable business, is the revenues. Raising money from investors is a side trip. And then you got to get back to your original business, which is creating a sustainable business with revenues. So if you can avoid the side trip, even better, and just focus on your revenues. And if you need investor money, if you focus on the revenues and gotten that part right, then it's easier to raise the revenues, raise the investor money later on. Sorry, check.
I think something that sometimes gets missed when we look at tech for good companies is the end user. Is the end user in need? Sometimes we see companies that are sort of doing something that's quite nice, but actually isn't addressing a group that's truly in need. So thinking about that is really important. And I think the other thing is thinking about, okay, if you're coming up with a new technology, is it going to be price equivalent to what's already there? Because again, if you're creating a new technology that you think is going to solve a great problem, but your users who are in need are not actually going to be able to afford that alternative, then there's not really much point you creating it. And specifically, we invested in a company called Planera, which is a completely dissolvable sanitary pad. And one of the things we time on was actually, is this pad going to be equivalent in terms of price to what's already on the market? And it was, and they were able to show that in their projections and in their manufacturing position, whether they're tech for good products or not.
Brilliant, thank you. That's so much wise advice. I think I almost want to watch the recording myself and make some notes. We're nearly wrapping up. We've had a couple of questions. They're quite specific, so I'm going to throw them out to the panel. Panel can decide whether they can answer them quickly or not. And if you want to duck, that's absolutely fine, because they're quite detailed and specific. So we've got one about, does anyone have an opinion on EBITDA multiples for tech for good startups? I guess the question probably is that any different from any other startup? Anyone want to, I think we've lost check, so it might be Chris or Sutin. Feel free to pass.
I might just say one thing, and usually, startups aren't yet profitable. So people tend to look more at sales multiples rather than EBITDA multiples. But I think for any company, an investor want to look at kind of path to profitability. So once you can get a feel and get comfort to the company, as well as scaling, they can be profitable reasonably quickly.
Cool, thank you. Oh, we've lost check. Sutin, anything to add to that? Or
well, we kind of look at the pre-seed early stages. So kind of as Chris said, we're even earlier stage than him. So often they don't have revenues yet. So it's hard to give any multiples there.
Good answer. And final question, what's your opinion on DeFi growth, risk, reward? I don't know if that means more to you than it does to me. What's your opinion on DeFi growth, risk, reward?
Yeah, I'm not sure I actually understand the question, I'm afraid. Sorry. Maybe Sutin does.
I'm not sure what DeFi is.
No, I don't either. So let's let that person, Maria, sort of catch up with some of us individually. So anything you'd like to say in closing, Sutin and Chris? Any sort of final tip for investors or entrepreneurs in this area? One little soundbite before we wrap up.
So a lot of things we've been saying is probably more for entrepreneurs so far. So just, I guess, something for investors is that actually in the tech for good space, it does require patient capital. And it takes a while for social entrepreneurs, basically, not just to figure out a solution that solves the problem, designing it with users, but it also takes a while to figure out the business model. So often the users, the beneficiaries, might not be able to afford to pay for the solution. So then they need to develop new business models, new ways of bringing this to market, and new partnerships. So this can all take a little longer than a traditional startup business where you try and just sell to the consumer themselves. So that is one thing to keep in mind. But the benefit, of course, is that you're making a great impact on society when this works. So you're getting a double bottom line that way.
Brilliant.
And just to add, I'm conscious of time. I mean, I've said entrepreneurs have faith, be strong. It's going to be hard. I mean, you're creating a company, and if you are approaching investors, it's hard to juggle the two. But don't forget why you formed the company. You will get knockbacks, unfortunately, but just when that happens, just remember why you formed the company, what you're trying to solve, that sense of purpose, and that should sustain you through.
So thanks, huge thank you from me for Chris Sutin and Czech. We've had years of experience from different perspectives in this tech for good sector, so it's been really good to hear where the differences are and a lot of commonality, a lot of really wise advice there. So really appreciative of your time and sharing your perspective. Before we pop back into the network, quick shout out that we're running NorthInvest a Tech for Good pitching workshop on the 21st of April in conjunction with Bethnal Green Ventures, and then are planning a specific Tech for Good pitching event on the 11th of May. So do get in touch with us if you're interested in either of those. So thank you very much to Chris, Sutin and Czech. Somehow you will be magicked back into the main forum where I think there's sort of 5 minutes or so of networking before the final pitching event. So thanks and hope to see you on the other side.